Hey guys, it's Will. I just wanted to do a little video on what's been happening in the markets and give you some tips on your trading. And I use candlesticks. And let's just take a look at the indexes here. I'm using TC2000, which is charting software. I've done a lot of videos on this. If you want to get a free trial, check out the link in the description below. And also, if you're interested in trading and understanding more, I've got a link to a course you can get a discount on as well. And it goes through a lot of detail on trading stocks with the moving averages and the candlesticks and sort of a strategy in great depth. And I'm in the course as well, and it's quite useful. So check that out. Okay, so this last week, as you know, there was a drop, quite a severe drop here on Thursday. And the question always is, can you see that coming and stuff like that? And the answer is kind of like you can see that there's a potential. You don't necessarily know it's going to be a massive drop like that, but you can see a potential to get out and avoid the potential of that. And then if it doesn't happen, you can get back in with certain stocks. So what I was going to talk about, I'll just show you, if you look at these candles. So as I've talked about in other videos, there's this 8 exponential moving average, and you can draw like a trend line, like an uptrend. And one of the criteria you can use is when the candle closes below the exponential moving average, the 8 here, the black line, you could get out. But so you could get out as soon as you'd have to technically wait for it to close way down here, which wouldn't work out too well in this particular case. In other cases, you can see here, it closes relatively close to the 8 EMA. So, you wouldn't, if you waited the whole day, you wouldn't have as big a loss. And it depends on where you bought in. So if you buy here and then all of a sudden it turns around, that wouldn't be a great scenario, but you're not going to get every single trade to work perfectly. But what we can see happening is, you can see here that we have this gap up here. And another indicator you can look at is called stochastics, and that's kind of what they call overbought, oversold. And once you get up over like 80 here on the chart, you kind of watch for a sell signal. And it doesn't mean just because it gets up here in the overbought area that you sell instantly. But you look for something. You look for signs that things are gonna cause trouble. One of them is when you have a gap up, it kind of shows exuberance. This gapped up from one day to the next, and then it gapped again, and that was from Friday to Monday. So those are big things to look for. So you see gap ups, you're down in the overbought area, and that sort of tells you to be careful. And the other thing is you can see that we had sort of a nice steady uptrend, and it's starting to curl up into a more of a parabolic scenario. And that's also a concern. But one of the big signals that you can use is when it gaps down. That can happen in an uptrend as well. It doesn't mean that you instantly get out, but a gap down is a bad sign. So what happened was it opened here, it went up to there, and then it opened way down here. So that was a gap down. And then and then you have another candle that went down as well. So there's people might have thought, well, there's some profit taking. We had this really big gain, and now there's a bit of profit taking. But one idea is, as soon as you see like a gap down and it's in this overbought area, you could get out or sell half your position. If you see another candle which is downward, that might be enough to get you out 100%. But worst case scenario, if on Thursday morning you see a gap down, you could sell right at the top for sure. Like, don't even wait. So it's not just that it closed below the T line, like over here, the 8 EMA. It's that it gapped down that morning. Okay, so in that case, you're not going to wait the whole day. And a gap down is basically stocks going down in the pre and post, in the pre-market and the post-market. So from here to here, this big gap, this actually happened in the morning. So when you wake up in the morning and you see that there's a futures market that's down, going down quite a bit, that could give you an option to sell in the pre-market as well. And that gets you out earlier even than here. So there were some signs. The other thing, now that we look at this, this is called an island reversal. So you have a gap up, you have some candles, and then you have a gap down. So there's like a gap. There's a series of little candles here, which they call an island reversal. And I'll just go to the other indexes first to show you that in the SPY, we had the same situation. So, and then the NASDAQ has always been quite a bit better. What this signal is an evening star pattern. So you have a candle, a gap, a little sort of a spinning top doji type little small candle, and then you have a gap down, and this candle goes down more than halfway down the previous candle. So this is a sort of a morning star, an evening star reversal. So it's not a guarantee you're going to have a long-term reversal pattern, but this is the first time. And when you see a huge candle like that on all of the three indexes, that's a sign that there's sentiment changing. And of course, you can look in the news and find out about increasing viral spreads again and various other worrying signs. But so once you had this big down candle and a close, it kind of wrecks the charts from a technical perspective, because you're not going to necessarily buy right away after that. So Friday, it started out good, but because you were down below the 8 EMA and nothing majorly in terms of an instant reversal candle, there's not much you can do from a swing trading perspective. But that reversal sign sort of indicated that it's a potential reversal on an ongoing basis. So what you can do next is see what happens. You could, some people might have jumped in and started to short the market. If you look at this opening today, it is down in the pre-market. You can see down here, if we go to the S&P, it's down, but there's a little bit of an up candle. It's still pretty early. It's 7:30 Eastern time right now. So it's not looking good, but one thing you can do is see what happens if it gets back to the 8 EMA and then it bounces down again. So it bounces off of it. So like on the upward trend, you see it come up and then it comes down. And then right there is a nice time to buy when you have that bit of a pullback. So if we go down like this and you haven't bought in, you might want to wait, see if it pulls back, if it can get to the 8 EMA. If it bounces off that and goes down more, then that's probably a good time to reverse that. Now, if you don't want to short stocks, I don't personally short stocks, you can look at inverse ETFs. So in TC2000, I've got this on the left here. You can see I've got watch lists, they're called, and every watch list could be built of stocks, whatever stocks you like, and then you can also scan and filter those. That's why I like using this program, because like even if you find stocks on another program like TradingView or FinViz or whatever, I've got those scans in here, and then I can chart them and scan and filter them even more. So I could filter stocks for certain prices or volume or whatever else I'm interested in. So let's take a look at some inverse SH. So that's the short of the S&P. So you can see here that this is the inverse. So you can see here that we were down, we gapped up with a big candle. So that's a sign that, you know, it's potentially going to be reversing, you know, in a more consistent basis here. And then we've got the next candle on Friday, which was still nice above the AEMA. So sometimes looking at the invert pattern chart can really open up your eyes to the fact that, you know, we probably are in a new trend going the other direction. So a couple of issues here would be the moving averages. So the 34 is not as significant as some of these, like the 50, but they are relatively close. If we look at PSQ, that's the short of the NASDAQ. That's another one that you can look at, potentially getting into. Another thing that you can look at, you might notice is these dots. So I've got a volatility stop, and that's a value that is where you could potentially put your stops. It kind of takes into account the range, the true range of the price oscillation. So what you'll notice here is it switched from red to green, and that's often a sign of a buying opportunity. So you see here it came down, turned green, and then we had an uptrend, and then we had this little red section and then green dots. It's not 100%, like, you know, obviously going to work every single time, but it is an indication of potentially a change in direction. We also have like this indicator here, MACD, and it showed a crossover here on Thursday, and the green histogram has changed as well. So there's definitely some indications of a possible trend change. We'll have to see. It depends on, you know, if you want to wait for a true trend change, you should see higher lows. So you would want to see, we have a break of a down, like well, if I go in the original graph, we have a break of the uptrend, and then now we have this downtrend, but you'd want to see that it came up a bit, created a high, and then went back down. So that would be a lower high in the case of the actual indexes. All right, so I hope that gives you a little bit of clarity on just what you could look for. If you're in an uptrend, you've bought down here and you're seeing it gapping up, and as soon as you see gap downs, you could potentially get out. Even if you did that here, you could sell half your position. You might, you know, decide to get back in on the next day. So it doesn't work 100% of the time, but especially when you're gapping up is when, you know, a gap down is a concern, and in the overbought area especially. But, you know, it's a bit of an insurance policy. So sometimes you might sell and then it continues to go back up again, and you buy back in, and there's, you know, it's just that you don't know what's going to happen, and this would save you huge potential losses. So, all right, hope that helps, guys. We'll talk to you later.